If you have $1,000 sitting in the bank, by the end of this video, you will know exactly how to turn that $1,000 into a small fortune. What the majority of people will tell you to do with that $1,000 is take that money and throw it into a low-cost index fund and then wait. Wait not for 6 months, not for 6 years, but wait for 30 years. That way you can turn that $1,000 into something a whole lot bigger. But what if you want that money sooner? What if you want to do something bigger? Or what if you've never invested your money before and you're still sitting on $5,000 worth of credit card debt? Then what? That's why instead of giving you a one-size-fits-all answer, I'm going to paint the entire picture depending on where you are financially and what you want to get with that money. And so I'm going to go over 3 different strategies. One is what I call the financial danger zone, then the passive investing strategy, and then what I like to call the infinite returns. That way you understand the different ways that you can grow that $1,000 based off of what's best for you. So let me start with the quickest and what should be the most obvious, which is what to do with that $1,000 if you're in the FDZ, the financial danger zone. Now before I jump into this, I do have a quick favor to ask you. We are now officially launching the Minority Mindset Show on podcast, Apple Podcasts, Google Podcasts, and everywhere else where you can see podcasts, but I need your help. I need some reviews and some 5-star ratings. So if you've gotten value out of the Minority Mindset Show here on YouTube, I would love it if you could please take 60 seconds, go onto your favorite podcast platform and leave me a review on the Minority Mindset Show. That way we can start building some traction there so we can bring you even more financial education content. If you are like the millions of people that do not have $2,000 sitting in your bank account to protect you against an emergency, or if you have any sort of high interest debts, whether it's credit card debt, whether it's payday loans, whether it's other forms of high interest credit card debts, then what I want you to do with the $1,000 is not worry about investing it in other places, but I want you to use $1,000 to take care of your foundational side of money. That means save your first $1,000. You want to save at least $2,000 to protect you against an emergency to start. But if you don't have at least $1,000, start with that. Then I want you to take that money and pay down your high interest debts like your credit card debts. If you haven't done this yet, do this with that first $1,000 before you worry about investing your money anywhere else, because right now you got to build your foundation. Once you do this, let's move on to number 2. The second way that you can invest this $1,000 is the more common way that people invest their money, which is through different types of passive investments, meaning you take that $1,000 and you put it to work in places that will work to generate you some money. Now, I have 5 different opportunities here that you can consider investing your money in, but I gotta give you this little disclaimer to begin with, because number 1, investing has risks. You're never guaranteed to make money when you invest. In fact, you will probably lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. And although I will give you some examples of funds, I'm not telling you what to invest in because I'm not a financial advisor and I don't know your own personal financial situations. So take everything that I say with a grain of salt and make sure you do your own research and don't just blindly throw your money into a random fund, stock, or anything that somebody on the internet tells you. So the first way that you can do this is paying off your lower interest rate debts. So you have a car payment, you have a mortgage, you have student loans, you can take that $1,000 and work to pay that off. And the reason why this is interesting is because let's say you have student loans that are costing you 6% a year. If you can pay off your student loans 1 year early, that is a guaranteed 6% return on your money. Now, the reason why that's significant is because if you put your money, let's say, into the stock market, now the goal is to grow your money by 7 to 10% a year, but it's not guaranteed. Maybe you can get a better return in the stock market. Maybe you'll get the same return in the stock market as paying off your student loans, but you could also lose money in the stock market. So this is where you have to find that right risk versus reward. See, when you pay down your student loans, you have very little risk and you know exactly what the reward is. You're going to pay off your student loans 1 year early or 2 years early or whatever it might be for you. But when you invest your money into the stock market, you're taking on more risk because you don't know what's going to happen in the stock market next year. The stock market could crash next year. It could also boom next year. And because you're taking on more risk, you want to see higher potential returns. So that's one way that you can invest that $1,000. The second way that you can invest this $1,000 would be to invest your money into the stock market. Now, when most people hear that, they think, oh, you're saying I got to go find the next Tesla, the next Amazon, the next Microsoft? And that's not what I'm saying. Because for 98% of Americans, the way that you become wealthy in the stock market is not by trying to find the next hot stock, because most people, when they're trying to find the next hot stock, they're going onto Wall Street Bets, they're going onto whatever Discord forums on the internet, trying to find some interesting stock, and then they dump their money in there, hoping that it's gonna pop off. But that's like gambling. And I don't play that game. I don't understand the game. If you can find a way to make money with that game, great, but that's not for me and that's not what I talk about. Instead, when I say put your money in the stock market, I mean put your money into the stock market. For example, there is an ETF called VTI, meaning if you go onto your stock brokerage and you buy one share of VTI, what you're buying is one share of the total stock market. So the way that these funds work is that you're buying a piece of all the companies on the United States stock market. An ETF stands for Exchange Traded Fund. And the way that these exchange traded funds work is that they trade just like stocks, but instead of buying one company, you're buying an index. You're buying a group of companies. So VTI is an index that gives you exposure to the total stock market. So if you just want to invest your money into the stock market, well, you can put your money into a fund like VTI. Again, I'm not telling you what to invest in, giving you an example, but the reason why you want to understand this is because historically, we have seen the stock market go up on average. But when a lot of people invest their money into stocks, they end up losing money. The reason is because they don't know what to buy. They don't know how to analyze a good company versus a bad company. They just throw their money into a random company and hope that this company is going to grow. But if that company goes bankrupt, you lose. If you sell your stocks then, when markets are down, you lose. But if you want to mitigate some of the risk, if you don't want to have to keep up with the company, if you don't want to try to invest into the perfect company, well, now you can invest your money into the total stock market. If you don't want to invest your money into the total stock market, another option is you can invest your money into something called the S&P 500. The S&P 500 is a group of the 500 largest companies by market capitalization, meaning by size, in the United States stock market. So you have funds like VOO and SPY, two different ETFs that give you exposure to the S&P 500. As a disclaimer, I own shares in VOO. Here I am on the VOO website, and there's a section called Performance and Fees showing the total returns. And what you see is that over the last year, VOO grew by around 30%. Over the last 3 years, it grew by around 11% a year. Over the last 5 years, it grew by around 15% a year. And over the last 10 years, it grew by around 12% a year. And since this fund was created back in 2010, the fund grew by 14% a year. Now you gotta remember, previous returns do not guarantee any future returns. If the market were to crash over the next 12 months, well then the next year's return are going to be very bad. They're going to be negative if the market is crashing, if the biggest 500 companies are going down. But what you want to remember is you want to be investing your money for the long term. That's the way that you win with this strategy, is you keep investing your money every single time you get paid, every month, every 2 weeks, every week. Every time you get paid, you want to keep putting your money into these types of funds. So if you have $1,000, the way that you win with $1,000 isn't just to invest $1,000 one time and then hope to see that money grow over the next 1, 3, 5, 10, or 30 years. It's to keep investing $1,000 week after week after week, month after month after month. And if you don't have $1,000 a week to invest $1,000 a month. If you don't have $1,000 a month to invest $500 a month. If you can't do $500 a month, do $100 a month. If you can't do $100 a month, do $25 a month. But get started, because that's what's going to allow you to compound your money and to compound your gains. The fourth way to passively invest your money here would be to invest your money into dividend-paying funds. I like to invest my money for cash flow. If you watched any of my videos, you've probably heard me talk about that countless times. And the reason is because when I invest my money for cash flow, I get paid without having to sell my stocks. I get paid without having to sell out my real estate. I get paid without having to sell off my assets. Meaning I can just work to stack the cash flow and increase my income. And now I can use this income to pay for my car. I can use the income to pay for my groceries. I can use the income to pay for my vacations, or I can use the income to pay for more investments that pay me more income. In the stock market, what you want to remember, and a lot of people get confused, is you're not investing in a stock. You're investing in a company. And now when you're investing in a company, you're also investing in the money that a company makes. Now, if a company is more mature and they're making a profit, there are three things that they can do with this profit. They can take this profit and save it for an emergency. You all remember what happened back in 2020. The pandemic hit and a lot of companies had no cash to protect them. So some companies will hopefully want to protect themselves by saving some of this money. Option number two is you can take this cash and reinvest it back into the company. That's what pretty much every startup does, is to take all of the money that they're making and then they reinvest it back into the company because they want to grow quicker, faster. And then option number three is you can take that money and you can give it away to some of your shareholders, to some of your investors. So as the company grows and it matures, if it continues to have bigger and bigger profits, you might not have a need to keep saving more and more money, and you might not have the best way to reinvest this money back into the company because maybe you don't have a good reinvestment option. And this is where now some companies will take this money and they'll just give it away to the shareholders in the form of a dividend or a stock buyback. Now, the nice thing about a dividend is you get that cash today. With a stock buyback, that means that your stock will hopefully go up in price, which increases the value of your investment, but you don't actually get that money until you sell your stock. A dividend, on the other hand, puts cash in your pocket today. So now what you can do is you can invest in companies that are paying out dividends, or you can invest in funds that are investing in companies paying out dividends. A couple examples of this are SCHD. Again, a disclaimer, this is an ETF that I'm personally invested in, or SPYD. SPYD is an ETF that gives you exposure to the S&P 500 companies that are just paying out dividends. So dividend-paying companies in the S&P 500. So now you can take this $1,000 that you have and work to invest it into funds that are paying you dividends, because now not only are you hoping to see the value of this fund rise, but you're also getting cash in your pocket today. And then you can decide what you want to do with that cash. You want to reinvest this cash, that way you can keep buying more cash flow, or do you want to take this cash and use it to go out and spend today? And I'll leave that option up to you. Now, as a little bit of education on the way that you win with this. Again, the way that you win with this type of what's called passive investing strategy is to keep consistently, passively, and automatically investing your money. I call it CPA. There are a lot of platforms that can help you with this. I use a platform called M1. Yes, they are a sponsor of Minority Mindset. Yes, I get paid if you use my link for M1. But I like M1 because it's very simple to use and they specialize with this type of passive investing. You are not required to use them. You can use whatever platform you like, and I want you to do your own research. I don't want you to blindly use any platform just because I say it. But if you want to find a platform that will allow you to passively invest your money very easily, then M1 is a great option. And if you want to learn more, I got the link to how you can use my affiliate link with M1 down in the description below. If you use them, I will get compensated, but there's no additional cost to you. But the reason why I like to use M1 for my passive investing is because it is designed specifically for this type of passive investing. So I have a system where every Wednesday, cash leaves my checking account and is automatically invested into my portfolio of ETFs. So I have ETFs that give me exposure to dividends. I have ETFs that give me exposure to things like the S&P 500. I have ETFs that give me exposure to innovation. I have ETFs that give me exposure to emerging markets. The bulk of my portfolio are dividend investing funds because I like that cash flow. But every Wednesday, I am just constantly investing money, throwing money into these funds. And every time I get paid with the cash flow, right now that cash flow is being used to just buy more of these funds because I want to keep building and stacking up the cash flow. I use that cash flow just to buy more cash flow. The fifth way that you can passively invest that $1,000 is to put this money into real estate. Now you might be thinking, but Jaspreet, how am I going to go out and buy a property for $1,000? And you're right. You're probably not going to be able to find a property on sale for $1,000. And if you do, it is going to be in rough condition. So the way that you can get exposure to real estate with a $1,000 investment is by investing your money into crowd-funded real estate. There are, again, platforms on the internet that will allow you to invest in crowd-funded real estate, meaning you're investing your money into a fund that's giving you exposure to real estate. And now what you're doing is you're not owning the actual physical property, is you're getting exposure to that property. And now if this property goes up in value, you will get your share of that. Or if this property pays out rental income and makes a profit, you will get your share of that. Again, nothing is guaranteed because real estate investing is risky, just like any form of investing. However, it's a way for you to get started investing your money and getting exposure to real estate without having to actually manage the property yourself and without having to go out and actually buy a property yourself. If you want to see different ways that you can do this, you can check out some more affiliates down in the description for that as well. And the third way that you can invest this $1,000 are ways to get what I call infinite returns, which are ways for you to really get that big upside with that $1,000 investment. And the way that you do this is by investing this money into your own income, whether it's changing your career or by starting a business, because we all know that some businesses, for example, the Dell company started with investments of less than $1,000 and then grew to a multi-billion-dollar company. So yes, you can stake that $1,000 and use it to build a very large company to make infinitely larger amounts of money, but that's going to require you to also put your time to grow this money. So let me start with the more, let's call it clear path through increasing your income by getting a career change. Because let's assume right now that you're working a job, you're making $12, $13, $14, $15, $17 an hour, which you feel kind of stuck because you're working hard, you barely have enough money to get by, you're trying to save a little bit of money, you're trying to invest a little bit of money. If you want to see bigger gains, you're going to need more money to invest. But in order for you to have more money to invest, either you can spend less, which there's a limit to how much you can spend less, especially if you're making $15 an hour, but there's really no limit to how much more you can earn. Now you might be saying, but Jaspreet, I don't have the skills to go out and earn $30 an hour or $35 an hour. How can I go out and do that? Well, that means you got to take this $1,000 that you have and now invest it into your own career. Take the $1,000 and invest it into your education. That way you can qualify for a job that's going to pay you at least double what you're getting right now. And you might be saying, well, Jaspreet, how in the world am I going to do that? Well, for example, you can go out and become a certified data scientist. If you go and become a data scientist, well, you will have the ability to earn close to $100,000 a year just from your job. Now, in order for you to get the certification and become a data scientist, you're going to have to do two things. Number one, you're going to have to invest your time to learn how to do it, and you're going to have to invest some money to actually get a certificate on how to do that. Now, when it comes to time, it could take you somewhere between 3 months to 3 years to get the certification to become a data scientist, depending on how aggressive you are with it, and it can cost you somewhere between $200 to $20,000, depending on what type of certification and what type of boot camp or what type of program you're doing to actually go about doing it. But what you got to figure out here is, if you have some money put aside, can you take this money and reinvest it into a new career, into a new certificate? It doesn't have to be data scientist, but as an example, can you put this money into a new career, into a new opportunity that's going to allow you to earn 2, 3, 4 times what you're earning right now? And if you can do that in 6 months, or even 2 years, that could pay off big time in the long run, because now you can invest 4 times more aggressively. Maybe you can invest 8 times more aggressively, especially if you keep your spending small, because the big mistake that a lot of people make is they see this big increase in the income and they start doing this big increase in spending. Well, if you increase your spending a little bit, but you increase investments a little bit more, then you're going to have the opportunity to build your wealth a whole lot faster. But this is where now you want to be investing your money and your time to change your career. The second option is to use $1,000 to build and start your own business. Now, this one's riskier, because starting your own business is risky. Most businesses will fail. But if you feel like you are an entrepreneur, not everybody should go out and start a business, and not everybody wants to go out and start a business. But if you are an entrepreneur, you know what I'm talking about here, where you feel like, I hate the idea of working for somebody else. I can't work for somebody else. I'm always thinking of business ideas. I need to be in charge of my own income. I need to be in charge of what I do. If that's what you're thinking about, then maybe you should think about starting your own business. Again, some people, this is the way they think. That's how I always thought. I never, ever thought that I could work for somebody else. I hated it when I did. And this is where, for me, starting my own business was the right option for me. But you have to find the right opportunity for you. And now, if you have this $1,000, if you have some cash put aside, you can use that money to start your business. Now, the mistake that a lot of people make is one of two things. Number one is they assume that starting a business costs tens of thousands of dollars or hundreds of thousands of dollars, and you need all this money put aside to go on and start a business, which is a complete lie. And number two is they throw all their eggs into this business idea before trying to protect themselves. Like if you have a kid, or if you have a wife, or you have a husband, and you have responsibilities, and you have no cash in the bank, and you quit your job to start a business, but you haven't started before. Well, now you're putting all of your eggs into this business idea and you have no idea what to do. Don't do that. If you want to start a business, if you have a job right now, the way that you do that is now you spend your evenings, and you spend your weekends, and you spend the holidays, you spend your time off starting this business. Yeah, that means you got to make sacrifice. If you're not willing to do that, you probably shouldn't start a business, because you have to put in a lot of sacrifice. The person that's got to put in the most sacrifice is the founder of the business. So if you're not willing to make that sacrifice, then don't start a business, because you're not going to stick with it. But you got to start putting in the sacrifice and figuring out what it is. And this is where everybody says, but Jaspreet, what type of business can I start with $1,000? And there's a lot of answer to this. But the first thing that I want to tell you is, I can't tell you what type of business to start. I get this question all the time. When I go and speak places, when I go and talk to people, I get this question all the time. Jaspreet, what type of business should I start? And your answer is going to depend on you. What problem can you solve? What are you good at? What are you passionate about? What do you enjoy doing? What do you see that you can fix? Some of you are going to be really good with the hands. Some of you can get into the automotive industry and create a better way to fix cars. Some of you are going to be really good at cooking. You're going to create an awesome cooking product. Some of you are going to be really good at customer service, and you're going to be able to create a great hospitality business. Others of you are going to love money and the financial education side of things, and you're going to go and create a big education business. But you got to find what's right for you. Now, there's a lot of different businesses that you can start for under $1,000. I mean, you can start pretty much any service-based business. If you're good at design, you can be a graphic designer for companies. You can start a service, creating visuals, managing the social media for companies. If you're good at marketing, you can create a marketing service. Now, don't make it vague, make it more specific. Is it SEO marketing? Is it paid advertising on Facebook? Is it paid advertising on TikTok? Are you going to be creating social media content for brands? Be more specific. The more specific you are, the more niche you are, the more that you're going to be able to charge. But now start approaching businesses and offer your services to them. Maybe you start a mobile detailing business where you go to rich people's houses, you go to doctors' houses, you go to attorneys' houses, people that have money but don't have time. You go to the house and you wash their nice cars for them. Maybe you start a driving business. I was actually just talking to somebody about this in the gym that used a unique marketing angle to build the driving business. He used to work in the limo business and then he switched it up because he saw that people weren't buying and renting limos the way that they were before. Now he has some nice black cars, and instead of offering limos, what he does is he works with high income earners like doctors, executives, and attorneys, and he says, your time is worth more than my hourly rate. So instead of you driving yourself to your office, to your clinic, to your hospital, 30, 40 minutes away, how about you just pay me a fraction of your hourly rate? And I will take you there in class, and you can take phone calls in the back, you can relax in the back, you can read a book in the back, you can buy back some of your time, and I will drive you there. There are a lot of different types of products and services that you can offer, but you got to find a way now that you can monetize something that you're interested in and that you're good at. That way now you can offer some value to the world. Once you start earning money, then the next question is how do you scale it? Because you don't want to be the person that's always having to do the work in order to get paid. Because if you become a driver and you only get paid if you're driving somebody else around, well, that's not a real business. You just bought yourself a new job. You want to be able to find a way to hire other drivers and to build something unique and valuable. That way you can build an empire that you're managing. But it starts with you figuring out how you can get paid, something that you're interested in, something that you can solve a problem in, and then figure out, after you start earning some money, how can you scale it to the next level. They know how to come up with an investment strategy. They know how to deploy their money. They know how to sell their investments. Well, they have a much higher chance. It's not guaranteed. You're never guaranteed to make money when you invest, but you have a much higher chance of making money. So this is where now you got to understand the risk versus reward ratio and understand what is going to be your investing strategy to get the best returns.